Hello everyone and welcome to this morning's webinar. As usual, we were just fiddling around with our headsets. I think we're all okay, but just before we start, if I could just ask you if you can hear me, just very quickly. If someone would put into the chat box that they can, let me type the question, because obviously if you can't hear me, it's a waste of time really. Hold on, can you hear me? Nothing's coming through at the other end, David, so you can hear me. Yeah, but if they can't hear me, no. Thank you, Chris. Much appreciated. I just realised I turned myself off when I was asking another question. Anyway, before we start, as always, may I draw your attention to the disclaimer that I know you can see on your screen. I know you have seen it many times before and other webinars as well, but it just bears repeating. This can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And certainly the way the markets are at the moment, with things being very lively, it's a perfect excuse for market makers, insiders to take money off naive and inexperienced traders. And I have to say, not just that, even experienced traders can be wrong-footed in the kind of market environment that we have at the moment. The webinar, it's, as always, myself and David. Here we are, and we will be looking at the markets through the prism of volume price analysis, because the truth with volume price analysis, it is you do have an advantage in as much that, first of all, you can actually see what the insiders are doing, because we look at the relationship between the price action and the volume. What VPA does for you, it basically gives you an insight into whether the moves that you see on the chart are valid or not. Are they genuine? Are they authentic? And we'll have a look at some of those moves that have been going on this morning, have been going on, and also see whether what is likely to be coming up next. Now, as well as VPA, we've developed a whole suite of indicators to help us with our chart analysis, and we'll be using those together with the methodology when we look at the charts. Going back to VPA, if you are not familiar with the methodology, it's in all the books that are on Amazon. You can apply it to any market, any time frame, but for a forex market, we've actually bundled together what we call the complete forex trading library. VPA is your, if you like, your technical analysis. But as a forex trader, in fact, as any trader, but as a forex trader, you really have to understand also the price action in the context of the fundamental news and also what is happening in related markets, because what the forex market is, it's the market of sentiment. It's the market that reacts the fastest to sentiment, and we have had a huge flip-flop in sentiment over the last couple of days, with markets roaring up and then yesterday collapsing out of sight, because all the markets are interrelated. As you see here, this is a slide from our forex trading program, and those of you who are on the program will know the program is very comprehensive and explains in very great detail how these markets interact and are connected with each other. Now, the big news yesterday, which caused this huge sell-off and this flight into safe havens such as the yen, such as the Swiss franc, such as gold, is what's called the inversion of the yield curve in the bond market, but particularly the inversion of the 2- and 10-year bond. We have had an inversion before. Those of you who have come along regularly will know. Was it a few months ago, David? We had the first inversion, but it was the shorter dated bonds. The 2 and 10 are like, oh my goodness, the Armageddon is here. All explained in the program, also touched on in the books that are on Amazon, but explained in great detail in the program, because as forex traders, all traders, you have to understand the power of the bond market. As somebody once said, I think it was I can't remember who, I can't remember if it was a politician or a central banker, but basically said that if he ever wanted to, come back into the world, be reborn, as it were, he'd come back as the bond market, because it scares hell out of everybody. It's the mafia, was it? No, it wasn't the mafia. It was someone legitimate, actually. It's the biggest, baddest, scariest market that's out there. It's the cost of money, and as I said, it's really important, that you understand how these markets all come together. And we explain this a little bit in these webinars as we go along. The indicators that we've developed to help us in our trading for the forex market, we have a little suite which we call the currency dashboard, and we'll certainly be looking at it today using we always start with the currency strength indicator, because that actually tells us where the money, into which currency the money is flowing on an individual basis. So for example, I talked about sentiment. If you have this complete reversal of sentiment, where is the money going into? Well, it's going into the yen, it's certainly going into the Swiss francs. So that's what the currency strength indicator does. It just tells us what is happening at any particular time frame, who's buying, what's being bought in the market. And this morning is quite interesting. Despite what happened yesterday, overnight we had some very positive news for the Aussie dollar. The Aussie dollar is a risk currency. It's been selling off heavily overnight. Good news for the Aussie. The Aussie is being bought. Why? It's better than expected employment data, very much against the run of play. So as a trader, what do you do? Is it going to offer you a potential trade? And that's what the currency strength indicator does. It demonstrates visually where those flows are going. Next, we have the currency matrix, because once we identify where the flows are going to, we then want to see where those flows are strongest. We said they were buying the Aussie, but what's the Aussie being bought against? Is it being bought against the US dollar strongly, or perhaps there's the opportunity of a better trade in another Aussie pair? And also, if you're not that type of trader, that you're just looking for a trading opportunity and you like to sort of put together a little portfolio of pairs that you just focus on, day in, day out or so, what the matrix will tell you is if an Aussie is, say for example, you like to trade the Aussie yen, for example, and Aussie yen and maybe a few others, well, they're buying the Aussie, but is it in your pair at that particular moment? Because the flows are not equal, they rotate. It may come into the Aussie yen, but then it may not. And we'll be looking at the Aussie, actually. I've been looking at the pound Aussie. David's got the Aussie Swiss, David. Nice moves in the Aussie Swiss, and also the Aussie yen. But those are the three Aussie pairs. But the trading opportunities aren't equal. You really have to, that's what you have to understand. We also then have an array which captures the momentum of any move, and it's a great indicator for giving us sort of overbought and oversold. All the other indicators do as well, the strength indicator and the matrix, but the array has an element of momentum in it. And finally, we have a currency heat map, which looks at the performance of the pairs across multiple timeframes. But the best way to see how indicators work is really on the charts in the live markets, which is what we are certainly going to do. The indicators themselves, you don't have to buy the currency dashboard as a package. All the indicators are sold individually. There are bundles of indicators, or you can go for the full package. All our charts that you see here have the complete suite loaded on the charts. There are lots of advantages. Start with one, test it out, see if you like it. If you don't like it, you can send it back within 7 days. The advantage of buying a full package is that when we develop future indicators, they're automatically added to your package. You never have to buy any more for us. You get 24/7 support. All upgrades are included, and as I said, you do get a 7-day money back guarantee. Platforms, MT45, TradingView, and NinjaTrader, and we are working on TradeStation at the moment. And the details of the indicators you can find at quantumtrading.com. All the videos and support pages are there. The program, the complete forex trading program, is at quantumtradingeducation.com. That does include the full package of trading indicators, as I said earlier, a very comprehensive program that really tells you what you need to know to trade this very complex market with confidence. It's not complicated, it's just complex, and it's quantumtradingeducation.com. Where you will find all the information on the different modules. And you can see here psychology, fundamental, relational, technical, and what we call the mechanics of trading. David, have I missed anything out on that? Because I just want to say this at the beginning, and that's it. No, that's it. Right, let's carry on and see what's happening on. Sorry? Can I jump in? Of course you can. No, absolutely. I'll turn myself.
Hello everyone, very warm welcome to you. I'll be very brief, just to highlight the fact that we've had an absolutely explosive start to the morning. Literally in the last, while Anna was talking, the last 5-10 minutes, markets have absolutely taken off, complete reversal to the sentiment as of yesterday. If we get 3 days in a row like the last 2 days, then it'll be unbelievable. But just to highlight the fact that we've got heavy selling on the yen, heavy selling on the Swiss franc, got it on the 5-minute, on the CSI for those of you who have the indicators, and everything else is buying very strongly. Canadian, pound, dollar, Aussie, New Zealand, euro, all shooting up. So we've got a really extreme market conditions right now. A lot of volatility around, so make sure you've got the volatility indicator on the charts. There's strong moves all over the place and the opportunity for trap moves left, right and centre. So just be warned, and all be revealed in volume. I'm going to pass back to Anna. If you have any questions, just drop them in the chat box. Happy to answer them there, or we will answer them on air for you if they're a bit longer.
Thank you. Just a couple of things today. There are retail sales at 9:30 for the British pound, but as I said, we've been tracking the moves in the British pound since, as I said, 6 o'clock this morning. And it's also a bank holiday in Europe, certainly a bank holiday in Italy. It's Ferragosto. In France, I think, as well. That's quite amusing about Italy. You may know Italy's kind of off the radar at the moment, but expected to come onto the front page, as it were, in the next week or so, because the government is likely to call there are going to be fresh elections, and it did make me laugh because I think Salvini insisted that all politicians return for an emergency debate in Parliament. Of course, they all refused. Why? Because this bank holiday in Italy is absolutely sacrosanct. Nothing happens, I think, short of World War III, will persuade anybody to go back to work in any way before Ferragosto is over. It's always held on the day, which is the 15th of August. And the good news is it's before the weekend, so it's bank holiday today, Friday. So with any luck, they'll be back next week. So expect Italy to be back in the media in the coming weeks or so. What that also means is there's lower liquidity in the market, certainly for Europe. So moving into, we've got 15 minutes to London, so we'll actually be interesting to see whether, as David has said, these explosive moves that have just happened are actually going to be completely reversed into London, or taken further, as it were. And again, this is something you have to understand as a forex trader. This is a 24-hour market, clearly, but it is actually 3 distinct, separate sessions, all their own characteristics. Individual currencies will move more strongly in one than another, the Aussie being an example. Why? Because we have local news in Asia that affected that particular currency. Sometimes that sentiment towards that currency will carry on, will transfer into the next session. Sometimes it doesn't. It's, you can't assume that because it's 24 hours, everything happens at an even and equal pace. It doesn't. Again, it's one of the things you have to appreciate. And of course, overlaying all that, you have the broader market sentiment, which the forex market reflects. And this is basically risk on and risk off. I said, I think last week or the week before, I was going to have a look at how to configure maybe some time frames which they're not sort of scalping time frames, they're not very short-term time frames, they're using these sort of slightly slower charts and time frame charts, and I've got the hour and the 15, and using the currency strength indicator. We advocate multiple time frames with at least I wouldn't say at least 3, but yeah, a minimum of 3, David, don't you? But I do understand that new traders, you know, there's all this information coming at you, all the different charts. It can be a little bit of a challenge. So what I've been looking at is the hourly, the 15, and looking using that in combination with the CSI, and I'll be going through that a bit later. But I'm going to pass over to David because he's actually been monitoring the NinjaTrader, the charts. It's all over the place at the moment. It's kind of, you know, these explosive moves have sort of come out of the blue, really. But as I said, he's been monitoring them. Let me pass over to him. If you've got any questions on anything I've said or anything we say, pop them into the chat box. Happy to answer them either on air or we'll just put the answer into the box. I'll just move over to David. Is that okay?
Thanks, darling. Hopefully you can all hear me loud and clear. Can't hear myself though. Never mind. There we are. Just can you hear me okay? There we go. That's it. Done it. Okay. Just adjusting the headset. Just move the chat box out of the way. As I said just now, really spoilt for choice in terms of the sort of reversals that are setting up. You can pretty much pick any pair you like at the moment, certainly across the faster time frames. I've got the pound Swiss. And essentially what is happening, you're seeing surges in volume, volatility spikes left, right and center. Traders will be jumping into these, looking for easy money. And now what we're seeing is the typical reversal, which is what we expect to see. This is just one. This is the pound Swiss. If we go down onto the 10-minute time frame, there we go. This explosive move here, traders will have jumped in there looking to go long. It was certainly setting up on the CSI on the faster time frames for buying of the pound this morning. The pound was very oversold. It's been absolutely cattled over the last few weeks. I'm sure you appreciate for all the various reasons. Won't bore you with those. Certainly decent, strong buying. And the one thing you can guarantee when you get volatility triggered, the volatility indicator here, you can see it straight off the bat. Ton of volume coming in. Market makers are playing in this. They're going to trap you, reverse, and take the market back down, or at the very least trade within the congestion period now for a period of time. All these people jumping in here late to take advantage of the move are now either regretting it or they've been taken out of the market by the reversal lower. We've got volatility again, so we're going to see more of the same. All of that's reflected if we go up onto the 1 minute, for example. Here you've got it. That was the move. Bang, up it goes, straight back inside, and now we've got a full-blown reversal underway. Ton and a half of volume coming in. And if you really only have to look at this from the perspective of VPA. If you look at and bear in mind that we're not in the London session, so we're quite at liberty to compare volume across this time frame. This is 7:45-ish our time, coming up to 7:50 London time. So over to here, where are we? 7 o'clock. Here we are. Beauty of NinjaTrader, it does print real time, or local time rather. This is the European Open. So we're quite at liberty to compare this volume in here. You can see the massive spike in volume that we've got. But what's more interesting from a trading perspective is this. If you look at the volume associated with this candle, very, very high. Then look at the volume associated with this candle, for example. Less than half the spread. Same amount of volume. What's that telling you? It's telling you that this is selling. The market makers are selling. They're in if that had been a genuine price move, this candle should have been pretty much the same as this. It isn't. It's less than half. So that means the bulk of volume in there is selling into weakness, more pressure, a narrow spread, more volume going in, weak. 2-bar reversal at the top here. We're at the volume point of control, so we're expecting congestion anyway. Volume is building on the volume point of control histogram to the right-hand side. And we're now breaking away. What's interesting at the moment is that we're seeing the volume falling away on these 3 candles, these 4 candles here. So we've got a market that's declining. We've got declining volume, but then we're coming off this massive surge in volume here anyway. Now we're starting to see a little bit of buying coming in on the market. This is on a 1 minute time frame, bear in mind, but the picture would be the same pretty much across the piece. Go up onto a slightly slower time frame on the 3 minute, pretty much the same picture. What's interesting about this is the amount of volume under this candle as associated with this candle. This candle tells you this is a trap move. Why? Because the volume isn't genuine. You've got a big surge in price, not associated with a big surge in volume. In addition to that, we then get the volatility spike, huge volatility spike, 1.5 tons of volume underneath it. The market makers are definitely playing in there. Then we get weakness signaled with this one. Market tries to rally. Market makers are selling into weakness. Bang, down we go. Now we might see a bit of buying coming in onto this candle. We've got a wick to the lower body. The market might rally off that because there's decent volume under it. On up to 4 minute. What have we got on 4 minute? Pretty similar picture. Huge volatility, 1.5 tons of volume, volatility, reversal into weakness. Off we go. Heavy selling under that last candle on the 4 minute time frame. Down on to 30. Very slow compared with the intraday, and as you would expect, a similar picture. We've got volatility triggered, this massive spike. So from a slower term perspective, then we are likely to see congestion, obviously, within that candle, assuming the candle closes, got another 15 minutes, 14, 30 minutes to run. If it closes within there, then we like to see further congestion develop as a result. And that's the beauty of using multiple time frames. Whatever your time horizon, whether you're a scalping trader on a 1, 2, 3, whether you're a slightly slower term trader on a 5, 10, 15, whatever it may be, and up into the hourlies and the 4 hours and the weeklies and the dailies and what have you, it doesn't matter. You're using multiple time frames to actually give you that perspective on your trading window. The analogy I've used many times in the past is that of a 3-lane highway or motorway. You're in the middle lane, that's your trading window, if you will, and you've got 2 wing mirrors on either side of the market. You've got a faster time frame on one side and a slower time frame on the other. What you're seeing on the faster time frame is what's coming up at you, and if that, for example, if you see a reversal or a change in trend or a change in sentiment, if that is a genuine move, in other words, it's not just a minor pullback, if it's a genuine transition, then that will appear in your trading window, and ultimately, of course, it will go out to your slowest time frame on the right-hand side of your chart. And that's really just the analogy that I use to explain it. So you're driving a car, you're sitting in the middle lane, and you've got traffic, faster traffic on the inside, slower traffic on the outside. Simple as that. That's the pound Swiss. Let's just go and have a look at some others. Let's have a look at the Aussie yen, see what's going on there. And this is pretty much identical, not quite, but pretty much the same. The reason for that is quite simple. You've got the yen, you've got the Swiss franc, which are risk currencies. They don't always follow one another around, but they certainly are on this occasion. So you've got pretty much the same move. If we just go up onto the 1 minute here we go. Again, massive spike, 1.5 tons of volume coming in on the next candle, volatility, heavy selling in this candle here, and we're back down onto the volume point of control. That's on 1. Let's go and have a look on the 3 minute. Again, we had the minor volatility here, then we had it associated with a ton of volume, which tells you the market makers are playing. They're in there, they're participating. This is not a fake move. They are moving that market. Then we get the heavy selling, the reversal, and off we go down to the other side. And we're going to trade around there for a while. Up onto 4, similar picture. And really, this is, almost identical across the various markets right now. And of course, we're coming up to the London Open in the next few minutes, so plenty of opportunity for further trap moves, certainly in terms of the pound. There we are, up onto the 30. That's where we are. We've got quite a bit of resistance sitting here. We'll see if that comes into play shortly as this candle closes off. And in terms of the daily, this is really what we've seen on pretty much across the piece, across the complex for the yen complex. Over the last 2 days, which have been absolutely phenomenal. I've said it many times before. We've spoken over the years, we've been doing this 20-odd years, we've spoken to a lot of floor traders, and what they will tell you is almost universally the same thing. The days, we call these the big money days because that's what they are and that's what they call them, because the rest of the year for them is pretty much noise level. They'll work the floor, they'll trade all day long, maybe they'll come out slightly up, slightly down, bit of profit, bit of loss, whatever it may be. But when the markets are really tanking or they're actually exploding, those are the days they make money. They make their big money then, and the rest of it is pretty much noise. And that's how you have to think of it. And when you get these phenomenal days that we've had in the last 2, those are the days you have to cash in, and you've got to cash in big time because they don't come along very often. And when they do come, we've seen quite a few of them recently, but generally speaking, the market will move You know, whether you're trading forex, whether you're trading indices, futures, whatever it may be, they'll trade in relatively narrow ranges. I mean, on a general forex pair, you might see a move of 50, 60, 70 pips in a day. On a volatile pair, you might see 100, 150 pips. That's fine. But on these big days, that's when you get these seismic shifts in sentiment and seismic shifts in terms of the price action that develops as a result. I'm not going to say it's easy, I'm not going to say it's straightforward, but those are the days when the market is really moving, and it's all revealed in volume. I can't stress it too strongly. This is the Aussie yen. We saw this big up day. That was on the China news, the apparent agreement, or the reflected in the fact that really the markets believe that China had, I wouldn't say won the war, but had got the upper hand as far as Trump was concerned. That was the way it was interpreted anyway. Whether that's true or not, who knows? But certainly it settled the markets. That's why they shot up the day before yesterday, and yesterday, as Anna said, was all about the yield curve, which hasn't changed. And you might say, well, why is it that on one day when a piece of news or an item of news grabs the headlines and the markets react to it, why does that not follow through? Ultimately, it may well do, but that's the way the markets are, and basically you can't trade with an opinion, you just trade what you see on the chart, and all of that is revealed through the prism of volume. This was yesterday, very heavy selling on the Aussie yen. In fact, some of the pairs sold off even more strongly. I think the CAD yen was certainly one of those. For the Aussie, it was less so, but certainly a really nice move on the Aussie yen. And if you were looking at futures, if you had the US indices up, then it was pretty straightforward trading, because there was only one-way traffic, and that was reflected not only in the indices charts, but also in the yen charts. And that's why we spend such a lot of time in the program explaining these intermarket relationships, and in particular, not only the risk, but also in terms of how that relates to bond markets and yields, and the cost of money, because this is all it's about, this business. It's not about anything else. It's just about money chasing risk. It's either chasing risk or it's looking for safe haven. That's it. There's nothing else to it. Very straightforward. The Aussie yen remains bearish. You can see it here on the trend monitor. We're seeing a little bit of weakness coming in now, coming off those highs. And there we are on the Aussie yen chart, back to the multiple time frames. We're trading around the volume point of control here, which gives us just so much information about not only where we are, why the market is doing what it's doing, but more importantly, what's going to happen in the next phase of price action. Very simple lessons here. You can see this that the pair tried to rally here. We had good volume under here. Bear in mind, we're still comparing over here on 7 to 8 o'clock. This is European session. Now what's happening, we're coming into the London session. So we have to be a little bit cautious in terms of what we're comparing now. And what will be interesting now will be to see how the volume in the early candles of London compares to this massive surge in volume that we saw at 735, 740 odd. But what we're seeing here right now is we've got the volume point of control. So we've got congestion on one. This could be a daily chart, could be an hourly chart, makes no difference. So we're seeing congestion. The volume is building. This is the maximum. This is the greatest volume we've got on the chart at the moment. Of course, it's building all the time. What's interesting on this chart is we've also got support and resistance coming into play. Down at these regions, these are hugely significant. These are very deep areas of potential support should the market approach those in due course. On the accumulation distribution indicator, which works on NinjaTrader, these essentially print that volume for, they print that region of price for you. The width of the line, the thickness of the line tells you how strong or weak that area is. You can see here we've got a very minor level here. This was tested here. So this is very minor because it's very thin, as is this one. This blue one here is a little bit thicker, so that's acted as resistance here, as you can see. So when this market comes down to test this level, if it holds, then this will thicken a little bit. But in terms of breaking through there, there's really not much in the way of, certainly from a price perspective, because this is all based on price, the accumulation distribution indicator, as you normally expect with support and resistance. It's all based around price and how often a region's been tested or retested. You can see it coming down here. This is very minor, so all things being equal, that should move through there very rapidly. These guys down here, this is very strong for two reasons. First of all, as individuals, they are very strong, but we have a cluster of two. So there's a huge, huge platform of support in at 71.85. So if the market gets down here, at the very least, you're going to expect the market to find some support. It may even offer a platform of support to a rally, but at the very least, the market is going to pause there. So if you're trading a 3 or 5 minute and wondering why on earth the market's paused, that will be the reason why. Moving to the volume point of control on the right-hand side, the histogram. If the market gets down here, for example, we look at volume from the perspective of support and resistance in the same way. We've got a low volume region here. So in terms of support and resistance, the market should move through this region relatively rapidly. So there's two reasons for the market to get down to this level. First of all, we've got very little in the way of price-based support on these guys. This one is just coming into play now. But secondly, we've got very little in the way of volume. You can see it here. It's falling away all the time. We've got decent volume here, and we've got price-based support as well. So there's two reasons for its pausing here. But when the market moves through here, if it does, then it should move through there fairly rapidly. Now, from a trading perspective, the corollary to that, or the conclusion to that is, well, if we get through 72, and you're a scalping trader, this is a 1 minute time frame, then from a scalping perspective, we've got a pretty clear run from 72 down to 71, 85, 86. So we've got 15, 16 pips of potential profit in here if the market does indeed move lower. That may be enough for you as a scalping trader. It may not be. Depends on the pair. If the pair's got a wide spread, 3, 4, 5 pips, that may not be enough, but that's a personal choice. But from a trading perspective, that's what you're expecting to see when the market gets down to that sort of level. Just move up onto the other chart, see what's going on there. We've got weakness here, any effort to rally with a big wick like that. We've got good volume under it. And remember, we are comparing from this point onwards. We are now looking in terms of comparison. We're looking at the volume here. And what's interesting, as you can see, is the volume here is nothing compared to the volume over here in the European session, which is unusual to say the least. Normally, it's the other way around. Normally, we see volume around this sort of level, and then you get the big spike up into London. So we've actually seen the reverse. We've seen, if you like, the London Open arriving early in that sort of perspective, and just trapping everyone on the wrong side of the market, surging higher, trapping a move, and now reversing and gently deflating like the good old souffle. I'm just looking over on Anna's screens. So she's got the other markets up, and also I've got the CSIs up there as well. Let's just go back to the pound Swiss, which we were looking at earlier, probably doing much the same, I would imagine. There we go. It's just loading up, and not identical, but very similar. So this is the emotional pressure that is now being applied by the market makers. Everyone's got trapped in here, jumped in, and it is now a question of squeezing emotionally the pressure on those traders who are sitting in this position and don't know whether this market is going to rally or whether it's going to reverse full-blown. Some will have been stopped out, some are still sitting in here. But if you're sitting in here, bear in mind, all right, this is a minute chart, so we've got, I don't know, what, 20, 25 candles in here, so that's 25 minutes you've been sat there so far as a scalping trader, which is a long time as a scalping trader. But if this was a 5 minute or a 15 minute, that's pain, I can assure you. So we're trading around the volume point of control, and exactly the same analysis as you would do, as I explained on the previous chart on the pound, on the Aussie yen. Exactly the same. You've got the volume histogram here. You've got the greatest volume on the volume point of control. The price at the moment is in agreement. In other words, there is no bias to the upside or downside. Market is just flip-flopping around the fulcrum of the market, which is the yellow dashed line of the volume point of control. So the market is in price agreement for the time being, and until it breaks away with bearish or bullish sentiment, which will be signaled by price action or volume, then that is where it's going to sit. Once it breaks away, we've got low volume falling away to the upside. We've got low volume down here to the downside, deeper volume here. That's combined with some more significant potential price support. We've got deeper potential price support here, but narrow volume. So there's price-based platform here potentially, but volume is lightweight down here. So if the market did break down through there, get through there pretty rapidly until it gets down to this next level here, where we've got some decent price support coming into play potentially. And that's really the same across the charts. Volatility, trading in volatility, volume point of control, support and resistance coming into play, and reading the volume profiles on the volume point of control as you would do normally. Up onto 30, that's what we're seeing. Volatility, now we're going to see trading within the range. And we've got this fairly deep platform here. This might help to support the market here, but it might not. If it goes through there, then it's going to act obviously as resistance rather than support. You've got to wait for the candle to close. Very little in the way of price-based support lower down that particular chart. Back at the volume point of control for the pound Swiss, ton and a half of price-based support here potentially, along with the volume point of control. So if it gets anywhere close to that over the next few hours, then that is going to come back into play and the market will move into congestion once more. Let's just go over to see what's going on the CSIs. That's on, where are we? That's on 15. Let's go back onto 5. Sorry, back onto 10. This is on 5. You can see all those reversals starting to take shape. This was the explosive move up until this point here. If you're a reversal trader, happy days. You're now looking for the overbought, oversold regions. You've got the Swiss franc down here, which is moving up nicely. So that was heavily oversold, as indeed was the yen. That's starting to kick up. These are the moves on the commodity currencies. Bang, bang, bang. Down on the Canadian, down on the New Zealand, down on the Aussie. Really nice reversal moves. The pound is still sitting up here. Doesn't mean it's not going to continue higher, but we've also got news up at 9:30, I believe. So that's potentially one that you might want to sit out until that news has come and gone. But in terms of what's going on across the markets, we're now starting to see these reversals take shape very nicely. Excuse me. And remember always, the CSI tells you so much. It tells you which pairs to go and analyze. It tells you what's moving swiftly and strongly. And the steeper the line, the greater the momentum will be in that particular currency. So the Aussie is selling nice and strong, so is the New Zealand dollar, diving very sharply. We've got nice strong buying in the Swiss franc. We're starting to see that buying coming into the Swiss yen here. We're starting to see the euro roll over and some selling come in there. And we've got nice strong selling in the Canadian dollar for the time being too. So the steeper the line, the stronger the trend strength or the strength of selling or buying in that particular currency. Then it's a question of, what is my tactical approach? Am I looking for reversals? Am I looking to jump into trends? What is it? If you're a reversal trader, you'd be eyeballing down here, as I always do. I'm always looking at the extremes first. It's my first port of call. I'm always looking for overbought, oversold, because I like to get in the trend early. If you get in the trend early, the risk that you have to lay on the table is greater because you've got to set a wider stop loss. It's as simple as that. But the payoff is you make more money because you're getting into the trend earlier on. You're getting in at the start of the trend. If you're a little bit more cautious and you don't want to put so much risk on the table, then you'll be looking at picking up a trend on one of these guys. Either the currency is coming down, the currency is coming up. You're looking to maybe get into an Aussie yen or an Aussie Swiss or a New Zealand Swiss or a Canadian Swiss, or maybe you're looking at the CAD yen as a potential to jump on a trend that's already underway, because those trends on the fast, if you are on the 1, 2, 3, 4, 5 minute time frames, those trends will already be well developed. And in fact, if you went to a 1 minute CSI, you might well find that they're coming up for a bit of a reversal already. That is the nature of what we do. Everything in the market, whether you're trading forex or any other instrument, it makes no difference. It's all wheels within wheels, and it's trying to understand that the trend that you're trading may be completely counter to a trend that someone else is trading, and yet both traders make money, because it's all to do with how long you're staying in the market. So you can be making money short as a scalping trader, while someone else is making good money as a longer term trend trader in the opposite direction. It's that simple. You have to understand that. And one of the keys that, again, we explain in great detail, is to understand when a market reverses, is it reversing from a primary trend to a primary trend? In other words, from a bullish trend to a bearish trend, or from a bearish trend to a bullish trend in whatever time frame you are trading? Or are you seeing a reversal into a secondary trend? In other words, a reversal or a pullback, not a genuine full-blown reversal. And that is another power of volume price analysis. I can't stress it too strongly. because if you understand just that, it will save you more heartache and grief over your trading career than anything else. Because what it does for you, it helps to keep you in the trend. It's as simple as that. And most traders don't fail because they can't trade. They fail because they cannot sustain a trend once they're in it. They get frightened out. So what you end up with is a stream of low losses, small losses, but equally a myriad of small gains. And so the two together essentially means that your trading capital is sort of dwindling. It's not dwindling quickly, but it's definitely dwindling. It's not moving forward. The only way you can move a trading account forward is to stay in a trend and make money when the market's moving. It goes back to what I said earlier on about the last 2 days. Those are the days you have to drive your trading account forward, because, and part and parcel of that is staying in a trend. It's holding that trend for the maximum possible, not being frightened out. Volume point of VPA is certainly the methodology, but it's also helped by indicators such as the trend monitor, which look at trends over a considered time frame and help to keep you in. In other words, to try and identify whether the trend is truly reversing or whether it's simply just a pause point. That's what's going on 5. Excuse me. What you're seeing now is a classic example of the reversals taking shape across the time horizons. It's all about using multiple time frames. And what you're seeing on the 15-minute here is just the start of those. It's what you expect to see. We've got very strong buying in the dollar at the moment. This red line you can see here. We're just starting to see the beginning of those. What you're seeing on 5 will filter through to 10, and ultimately, if these are true full-blown reversals, they'll filter right the way across the time frames, 15, 20-minute, 30-minute, whatever it may be. Just head up onto the array. I had these isolated out for the yen earlier on. Let's just pick off the yen a little bit slower time frame. There we go. You can see there what that's telling you is several things. First of all, it's giving you a heads up in terms of where the strongest trends are. It's giving you an idea of whether sentiment across the complex is universal. In other words, are we seeing universal buying and selling of the currency? And if these are all stacked up at the top here on this particular time frame, which you can see at the top here is 10 minutes, then the answer to that is yes at the moment. That's what we're seeing. And what it also tells you, what it also reveals, is the strength. This is the Swiss yen, so this is the weakest, the strongest, or has been the strongest, is certainly the Aussie yen, and the others are up here. The yen is the easiest complex to identify this because the yen is the counter currency, and you're going to see it across the time frames. Just go down onto the matrix. We've got the matrix on 10, matrix on 5. Let's just see where we're going on 5. Let's isolate out. Let's have a look at the Swiss franc. Let's see what's happening on the Swiss franc, just for a change of pair. You can see this is backed up, or this is on the Aussie dollar as well. So you can see the Aussie selling off here against the dollar. And if you remember, you've got the Aussie coming off the highs, and you've got pretty strong buying of the dollar. That's why you're seeing that reversal come off there on that particular time frame. And what you're seeing on the matrix is you're seeing that reflected on the matrix also as these currencies move up and down the ranking ladder. We've got strong buying in the Swiss yen here. We've got equally strong buying against the Aussie here for the Swiss franc. And gradually what you want to see, and again, it's across the multiple time frames, is these guys move up here. Sorry, apologies. The pound Swiss you want to see moving down this way. And then the others you want to see moving to the other extreme, because when you've got the counter currency in different positions, in other words, it's either the first or the second, or the primary currency versus the counter currencies, then obviously they're not going to rank in the same way they would on the yen pairs, where they're all going to be at one end or the other. You can see here the Aussie Swiss is the weakest at the moment. That's selling off nicely. It's being joined here. Looks as though it's been joined by the New Zealand Swiss, and the CAD Swiss is pretty much what we're seeing on the currency strength indicator. So we're seeing selling of the commodity currencies, buying of the Swiss franc now. You want to see this one move down here. You want to see this one move down here. You want to see this one move up here. And the pound Swiss is a little bit isolated at the moment. It's kind of mid-table. So what that tells you is that, and in fact, if we go over to, let's have a look at the reason that is sort of mid-table at the moment is because what we're seeing is we're seeing buying of the pound here, this yellow line, but what we're also seeing is buying of the Swiss franc. And that's the reason that particular pair is kind of flip-flopping around mid-table, because you haven't got any differential momentum between the two two currencies rather. They are moving in pretty much the same direction. Equally, if you go and look at any of these, really, you can look at the New Zealand, the Aussie, the CAD, the Euro, they're all moving in the same direction. So if you look at a Euro CAD, for example, or an Aussie New Zealand chart, they won't be going anywhere because the two currencies are moving at the same speed. It's another analogy I use is it's two trains coming out of a station. If you imagine it, if they're moving at the same speed, there's no differential speed. So there's no differential a speed of change. There's no rate of change between the two trains. One may be moving slightly faster than the other, and in currency terms, that means one is perhaps selling off a little bit stronger than the other, where you might see a minor trend develop, but you're certainly not going to see the strength of trend developing that you see right now in terms of these guys, where you've got strong selling on one and strong buying on the other. I'm going to pass back to Anna. Sorry, I switched off.
Oh, brilliant. Thank you. Right. I said earlier when we first started that I was going to have a look at, actually show you what I've been doing this week in terms of using it was actually the hourly chart. It was the hour, the 15 with the CSI. You can catch up on, I kind of started the whole thread on Monday. And I've written about it on one of the Facebook pages I run, which is called what's it called, Learn Forex Trading. If you just look it up, and you can catch the thread there. But just to summarize it, as I said, I wanted to come up with a combination of time frames that weren't too weren't too many of them, and that would allow, how could you perhaps look at a trading opportunity and possibly think of putting a trade in and not forgetting about it, but don't have to spend all the time in front of the screen. And the reason I chose the 1 hour as opposed to the 4 hour chart was simply because, as I said earlier, this market falls into three very distinctive sessions. They all, as I said, they all have their own characteristics, and the different levels of participation, different levels of liquidity. And sometimes with the 4 hour chart, it's two candles is one of the sessions, which is the 8 hour, and then there could be a lot going on in those in those 2 4 hourly candles, and it's just by the time they close off, you're moving into another session, and then the setup that you think looks okay in maybe, I don't know, in one session, it kind of reverses it, and it can reverse quite dramatically and maybe take your stop out, and traders think, oh, why did that happen? And it's simply because you're moving from one session to the other. Anyway, the 1 hour chart is not, I don't think it's too many candles. It's 8 candles at a time. It tends to pick up, as I said, what is happening in certainly in Asia, and then you have the sort of London, etc., etc. Anyway, the pair that I looked at eventually, what I suggest you do is you just flick through all the hourly charts. It doesn't take very long. It's, as I said, if you're looking for a trading opportunity and you don't care, what it is, this is what I suggest. You just, open your platform, you put up View, Market Watch, pull up the hourly charts, and just have a look. What is the hourly chart telling you? And this was Monday. Well, this was Friday. We've got the 9th, and this was the beginning of. This was 3 o'clock this is midnight on Monday morning, the sort of start of the session. But really, I started to look here when I came to it, and I could see that the pound Aussie was in this sort of congestion phase, really pretty much from before the weekend. You can see here, very strong platform of support here at, where was it, 77.13. At the time, the volume point of control wasn't here, and I'll show you that because I actually took a screenshot for my Forex page, and I'll show you. This is what I actually saw on the Monday, and it's much clearer. I saw this this congestion, this sideways movement. There was the volume point of control. And I looked at that on the hourly chart. We can see there's the really nice move lower, as David said, on the trend monitor, which would have helped to keep you in. And I saw this, and I also on the CSI, you could see there was some pound buying coming in and a selling of the Aussie. So, you know, the two currencies themselves were kind of saying, well, maybe something is going to happen. Well, this was on the hourly chart, and you can see here the amount of volume that actually came into the move higher. I won't go through the reasons for this particular setup. As I said, it is over on my Facebook page. But this was what the hourly chart was telling me at the time, and in fact, it turned out to be almost over 100 pip move. We've got 1, 2, 3. There's one thing about MT5 which I find really annoying, unlike MT4, when you can just you hover over the candles and it comes up with the time and the date stamp, the time stamp and the date. And for the life of me, I cannot get it to work on these candles, so not very well. But what you can do with the trend monitor is if you just hover over the trend monitor at different places and just line it up with the candle itself, you can see it actually brings it up, which is really nice. And so that's a really nice tip for MT5 if you have the quantum tools. It's one of the things that really annoys me about at MT5. Anyway, this was the move that was captured. Now, the actual entry, I thought, well, that's all very well, seeing this set up on the hourly, what are you going to use perhaps to see when, the opportunity comes in to enter. And here I actually went down to the 15-minute chart. Now, I don't think the 15-minute chart is going to go far back enough, but again, you can read about this on Facebook, because I actually give the actual not the entry levels, but the levels that I was looking at and why I was looking at them at the time. And going back to the hourly chart, what I was trying to say here, so this was the move. Then we did have this, the resistance was at, I think it was 77.19, something in that area. It was this under this candle here, and if you look here, you've got rising, you've got good volume, big candles, and then you start to have kind of doji candle, a kind of hanging man candle, and a shooting star candle, all on similar volume. That in itself is telling you that this particular move, which was a fairly spectacular move for a Monday, a quiet, in inverted commas, Monday morning, although markets aren't quiet at any time of the day or night at the moment. So that candle combination is telling you of itself that this move is possibly coming to an end. And then we did have actually a pullback. Then we have some sideways, because we are then moving into the Asia session. And in fact, we then had a very nice move to the downside, enough of a move to take some points there, back up to retest these levels from where it had it had pulled back from. And at the time, if we look at the VPOC here, the volume point of control histogram, at the moment it's down here at 77.37. But when this price action was developing, it was actually here. Can you see these two bulges here? You've got a bulge there and a bulge here. Now, at some point during the day, this is possibly going to move back up here. So what the VPOC has also been doing, the VPOC tells you it's there to help you with your breakaways, successful breakaways. And we can see here, you ignore this because at the time the VPOC wasn't here, but certainly after this move lower, dramatic move lower, this was the crash in what was it? Oh no, this was euphoria. This was the Aussie being bought when what happened? Why was there? I can't keep up with it. Why was there suddenly euphoria? Oh yes, oh that's right. Trump was delaying. He hasn't actually said he's not going to delay till Christmas because he doesn't want to spoil the shopping season. So that was the euphoria in the market. Aussie is buying. So we had this is what we had. This is the response. Some more sideways, and that was this was the complete reversal. I can't keep up with it. So the VPOC again, at this point, did provide the platform for a potential breakaway. But what I wanted to show on the hourly is you can get these very nice what I call looping phases of price action, and it's not too noisy. It covers all the sessions, and if you use it in conjunction with the CSI, let's have a look at the hourly. I'm just going to take it off docked here. Let's have a look. To take that down and really track the pair, the actual individual currencies. Now, this particular move here, certainly on the hourly chart, is being driven by the buying that we can see in the British pound. Now, I'm staying with the pound Aussie because it's a pair that I've been tracking all week. But if I look on the hourly chart and I see, well, as I said earlier, which of the pound pairs has been bought most strongly over, you know, in the last few hours, as it were, well, clearly it's the pound yen, because that is at the top of the matrix. The pound Aussie has actually stayed at spot 27. It has been moving, but certainly not as strongly as the yen. We also know it hasn't been moving as strongly, primarily because at one point the Aussie and the yen were moving in the same direction. But this move we see at the moment is very much driven by the British pound. At some point, if the Aussie turns over and the pound carries on, then there is going to be more potential in this move, and it will be reflected in the matrix. And this is an example of not looking at a pound pair, you know, just saying, oh, I don't care which pound pair I want to have a look at. David did that. He looked at the pound Swiss, David, because he said, I don't care. I'm not really interested in the pound Aussie. I just want to find the best pound, the pound pair that is going to offer the best trading opportunity at this particular moment in time that I am seeing. You know, what are my charts telling me? What are my indicators telling me? My approach to this particular, to what is happening in this British pound, is to continue to look at what is happening to the pound Aussie, because it's something that I've been looking at all week. So as I said, this the move overnight in the Aussie, better than expected employment data, pushed it down, triggered this volatility candle. This is the volatility candle on the news, and as we can see here, what is actually happening to the price action at the moment is actually trading within the spread of the candle. This is a continuation of this downward. The trend monitor actually hasn't transitioned to bright red, but neither has it transitioned to bright blue, which tells us that on the hourly chart, at the moment, we are still in congestion. We know we're in congestion because we are also within the spread of the volatility candle. But as David said earlier, if you are at the very shorter time frames, and look, this is the Renko chart, there is nothing wrong with taking this move to the upside. There's enough in there to warrant, you know, there's enough of a move there to say, do you know what, there's enough for me to take a trade. And in fact, that move is this is the explosive move higher in the pound, again off the volume point of control. I really can't stress enough how much the volume point of control can help you, not only with potential trading setups, but also it highlights those you know, once you're in a move and a target, it tells you, is the price going to go back to that region on the chart? It's also there for stop placement, because if you are using the VPOC, let's go to the 15 here. So you see this, you've seen what's happening on the CSI. Okay, that's all happened. That's all. That's over and done with. You think, yeah, I am going to take a bit of this move higher based on the Renko. What can the VPOC do? It can also help with stop placement, in the sense that it is telling you where to place your stop. So if you're going long, you place it in an area below, and if you're going short, you place it above. Now, I said on the 15-minute chart, let's have a look here. This is the move lower. This is the explosive move following the data, but the move lower actually started much earlier for the pound Aussie. As a trader, you would have seen this technical setup. You would have seen the breakaway from the volume point of control. The trend monitor is red, but you know there is a piece of news coming up. Now, this just so happens that the fundamental news helped to push the pair lower. In other words, buying of the Aussie. But and that's all very well in hindsight. That looks great. You think, oh, great, I saw that move there. I went in. Oh, great, I saw this. But realistically, that is a nice move, but if you're if you were actually faced with the prospect of looking faced with a piece of fundamental news, I suspect, as a short-term trader, you would certainly have closed up, because you don't know, that could equally have gone completely the other way, and particularly given that the Aussie is representative of general market sentiment, and the Nikkei sold off quite heavily overnight, didn't it, David? It down in a pound. So this move in the Aussie is not the norm. You would not expect, one piece of fundamental news to to move a pair in this way. And as I said, so you would have probably come out, waited for the news, and then maybe gone back in. This is on the 15. The hourly chart, as I said, again we have this move lower. Again we have the volatility trigger. It tells you so many things. It tells you what is likely to happen from a price action perspective. It tells you what the insiders are doing, and it is, if you're in a short term in a trade using faster time frames, you can also use it as a means of exiting that trade. Say, that's it. I'm out. And sometimes it will take you out anyway, because if the volatility goes in the opposite direction to your trade. But it's just interesting. Look at the hourly chart. Look at the chart setup on the hourly chart. Then go to the 15-minute. If you have our indicators, certainly look at what the two currencies are doing. Start on, as I said, on a Monday morning, particularly when you see us, when you've seen a pair in this congestion, by all means compare it with what is happening on the daily. I haven't even mentioned the daily. We're actually in a congestion phase on the daily. We've got piano keys, we've got up, we've got down, up, and are we going to go down today? Who knows? It's just reflective of the market at the moment. But because they are big moves within these piano keys, if you like, the opportunities are there, certainly on the very fast time frame, but also on the hour, the 15-minute, and I do urge you to consider something like the CSI if you haven't done so, because it will, you will catch these oscillations. You will see the oscillations in the faster time frames, and and see what they are doing also in the time frame of your chart. And this is the hour, and seeing the pound looks like it's still being bought. Let's see how the pairs are stacking up. No, we're still down here on the pound Aussie, and the pound Aussie is one of those pairs. Yes, we do have volatility, but it's certainly not as volatile as the pound yen, and it's one of those pairs that the moves you will see across, certainly in the London session because of the pound. You will also see moves in the Asia session as well. Is there anything you want to add to that, David? Are you answering questions? Okay. We have to go. We've actually run over time. Thank you so much for coming along. We will be back later today at 3:15 when we'll be looking at indices. Hopefully they will be doing something after yesterday. Are they doing actually anything? Are they still selling off? Do we know? Sentiment? No. Oh, okay, fine. But to do with the pound, as I said earlier, very quickly, we have a piece of fundamental news for the pound. Let's have a look.
They tried to rally and now they're starting to sell.
Okay, fine. Yeah, as I said, we've got retail sales at 9:30. So certainly, if you're on a fast chart, then that is something, and you're in a trade or you're thinking of taking a trade, you may wish to reconsider or at least wait and see how the numbers come in. Brilliant. This afternoon, what have we got? We've got core retail sales in the States. We've got the Philly Fed, but I think the big news of the day is still the inversion of the yield curve and what it heralds for the markets. But I have to say, and I keep saying this, you will read the headlines and it's, oh my goodness, the sky's falling in. It may be so. You are a trader and you have to kind of be semi-detached from the headlines, because if things are selling off, it's a trading opportunity. If the market is being bought, it's a trading opportunity. You want to go with the sentiment in the market. You're not in this market as an investor. If you're an investor and the yield curve is inverting and your money is in stocks, of course it's going to affect you in a completely different way. As a trader, this is an opportunity. You are a speculator. You don't really care which way the market is going. You want to be on the right side. Some people find that difficult, and I know there are traders. I think we met someone who liked to use volume price analysis, but he says, I could never go short. He could never short shares. Well, you're not a trader, then you're an investor. Even as an investor, so I can't. He found it morally repugnant. Well, as I said, as a trader, you are completely agnostic. You really don't care whether something is going up or down. You just want to be on the right side. As an investor, it's a completely different mindset. Please don't confuse the two. Right, thank you. Again, thank you so much for coming, and if you're coming along later, we'll be here at 3:15 London time. If not, enjoy the rest of the trading day. Certainly interesting times, as they said, and stay safe, and we will catch you next time.